We're going to talk about the public sector banks and why I think the public sector banks are in for a very strong up move now. If you just go here, let us just analyze why I think that the public sector banks are in for such a big rally. Now, if you just notice this, you can see that this is the moving average, this blue line that we see over here. And typically, the prices, even if they're trending down, they don't move too far away from the moving averages. Whenever that happens, like here, the prices move fast and far away. You get a consolidation, you get the prices picking up again, go back to the moving averages. That is something that always happens. Like the moving averages act like sort of a magnet when the prices move too far away from it. What we have seen over here is that we have seen a very sharp decline in the prices of the PSU banks, and we have seen a small rally as well here, this zone, but that rally is, I don't think this rally is completed yet, and you can see the moving averages are still very far. So I would say that this bottom is definitely in place, and I think in the coming, weeks we are going to see all these PSU banks go back higher again. If you notice, there is very little resistance as well. There is nothing, this entire zone is so there are no resistances really. So once the buyers do come in, you will see that the stock can rally rapidly all the way up till 80. And if you see now, Bank of Baroda is at about 48. You're talking about 3 by 5. That's about 60% rally. I would say that at least at the minimum, I think we will get a retracement at about till about 80, 85 levels. I think that is very much on the cards, unless and until something catastrophic were to happen, like something like a war, in which case the entire market really collapses. I don't see that happening at the moment. I think we are going to continue, in the mid cap outperformance, and I think PSU banks will catch up. And it is not just this bank. Let's just look at some of the other banks as well. So this is Bank of India. So if you notice again, Bank of India, a lot closer to its moving average, but again, it has also made a very sharp U-turn, and you can see that this rally, this retracement is coming on high volume. See the volumes here, and you see the volumes here on the downfall. Here there were lower volumes, whereas here you can see the volumes are much higher. What it means is that there are a lot of buyers at these lower levels, and you definitely can see that it's not like they are just throwing all the shares out. So my point is that I think all the weak hands from the stock have been moved out. This is Canara Bank again, the same thing. No resistance till like 157. Prices at 102, and again the same thing is being formed. I expect these also to rally. Central Bank. This is Indian Bank. So Indian Bank has been a little more. It's probably of all the banks, I think this one looks like it's gonna rally probably the most. It has a resistance where it already stopped once somewhere here at about 74 levels, but once that gets taken out, I think it can really rally all the way to 130, 140 levels, and it's only at 65 at the moment. So I think we are going to get a very sharp rally. Again, I'm not saying that these are going to enter into long-term bull markets, but what we're going to see is basically a sort of a mean reversion on a weekly time frame. Now this is Punjab National Bank, something very similar that I was talking about in uh, you know Bank of Baroda. Again, next resistance at about 57, current price is at about 32. So this is State Bank of India. State Bank of India, the next resistance is really at about 235 levels. And you can see here we're getting a minor, you can see this pattern is a sort of a head and shoulder. And you can see that the stock is trying very hard to break out. I think it's this entire time, I think the stock is consolidated and is looking to break out. So I don't see any real resistance till about 240, 230 levels. This is one level where you will say 230, but I think it could go back and easily test 240 levels also. So in my opinion, I think this whole thing is sort of a massive reversal pattern, reversal head and shoulder. Technically, that is what they call it. And you can see from a chart analysis perspective, this can be your stop loss at about 167 if you're playing for a large bounce, or if you just want to take a swing trade, you can keep your stop loss a lot tighter at about 180 rupees, with the current price being 200. If you're gunning for 240, you would still get about a 1:2 risk reward ratio, which I think is fairly good in a stock like SBI. So thank you for watching, guys.